So, good morning, active traders, and welcome to our Trading Week Ahead broadcast here for Saturday, May the 28th, 2022. We've got a 3-day weekend, and happy Memorial Day to you and yours. We've got a day off on Monday. Markets resume on Tuesday. So, what do you guys think about this bear market rally? Is it going to continue up, or do you think it's destined to go back down at some point? If you look at the S&P, you can see here we're in a relatively strong downtrend continuation in the market, despite the 3 days of up that we had Wednesday, Thursday, Friday. Now, it's widely expected that the broad market will continue up a little bit, maybe Tuesday, Wednesday, but I would be looking for some continued bearish sell pressure late next week, maybe even early, but late next week or the week after. So that gives us a brief window of opportunity if you're looking for swing trade setups. It's very much still a day trader's market, right? There's so many good setups in our market, and I hope that you guys are doing good. Let's see. I'm glad to hear it. Yeah, I agree with Mira. Downtrend's not over yet. This is a brief respite. Now, the question is, how long does the bounce last for? It's always a question. One technical significant point, I'm a big fan of this guy, Chartmaster, Carter Worth on CNBC. He inspires me to try and do good technical work myself. What's significant what is significant about yesterday's price action is we did break the trend. Okay, we did. Remember, a downtrend is defined as a series of lower lows and lower highs. Now, when we broke over that 4,100 in the S&P yesterday, that broke the downtrend. So we are now in a confirmed reversal of trend, right? So we do have a bullish bias for now because, and only because, we broke that downtrend. Remember, each previous bear market rally we saw on the way down failed to take out new highs. See how it dropped down and then it bounced and it kept on going down and it bounced and dropped down, it bounced. Now it dropped down, it bounced, and it broke out above the previous peak. So that does tell us that we may have at least a brief respite in the selling after 8 weeks. So we may see continued upside for as long. I would be surprised if we get buyers into Thursday and Friday. I would not be surprised though if we see buyers into Tuesday and Wednesday. So I would expect a resumption of the downtrend, if not late next week, early the week after. So a week from Monday. Now, if we take a quick look at our VIX, you can see volatility is hugging support. This is a pattern, I believe my colleague Steve Nisman called a change in polarity. Previous resistance became new support, not once, not twice, but going on three times. The critical point, and this is very valuable, you won't hear this anywhere else unless my competitors are watching, they're copying me, but the point is, we still stay net bearish, the market, big picture, unless the VIX gets down under, and it may well get down under 25. So the 25 VIX is a key support level. Keep a visual eye on the VIX, the volatility index next week. This is opposite of the market. So we had a shooting star up here. We have several large red candles coming in the way down here. But the main data point for the VIX, and this is a rider downer, right? This is important to visually remember. If the VIX gets under 25, we are long bias. If the VIX bounces off the 25, however, it may chop around the 25, say Tuesday, maybe Wednesday. But if the VIX bounces back over the 25, or stays above the 25 and bounces back up into the range of 28-30, that would be a bearish signal. So that's the most important thing I will tell you today. Trust me, well, you don't have to trust me, but follow me on this. Do make sure you follow the VIX. So if the VIX gets under 25, we are still in directionally long bias. But if the VIX holds support here, 25 and bounces, we should be cautious long and more inclined to a short bias on a reversal. So that's important. That's very, very important, by the way. Now let's take a look at a few charts here. My favorite charts for pivots right now are Disney. Right, Disney has a 3-day reversal. It came down off 150. It's down off the 100. Remember, I told you it'd be a bounce last week because of the hammer that we saw a couple weeks ago, right? There on the 12th. So we do have a reversal in Disney. Disney is a long call for me. And I traded it long earlier and I sold it though on Thursday. I should have held it. But anyway, I will be getting back into Disney up over the 110, 112. So Disney is a pivot play. My favorite one. We also have some support here in Netflix. It doesn't really have a compelling case for a long pattern, but if it gets over 200, I'm going to get into it. I was trading the first bounce there. I'm going to trade Netflix if it gets back over 200. It was 400 just a couple of weeks ago. Now all the way down to 200, slowly climbing up. So if Netflix gets over 200, it's a buy. And not a trade recommendation, but at least what I'll be doing. PayPal also looks like a good reversal. I got you guys called along last week. Congratulations if you listened. It's currently trending up here right under 86. So PayPal looks good. One that's really been taken in the shorts is Bed Bath & Beyond. It was up near $30 a share and now all the way down at under 10. I will be buying BBBY if it gets over $10 a share with an exit target of around 18. It's kind of a mean reversion upside pivot, around half the trading range there. So we go long here, look for an exit target here. Another crowd favorite, though pricey, is NVIDIA. It doesn't have the range or the volatility I like, but it does have a reversal pattern with large green volume. Do you see the large green volume bar? Accompanied by the large green up day of $20 on Thursday, right? NVIDIA had a $20 day on Thursday, only less than half that yesterday, but it does look like it's poised for a break. I think most institutional traders and myself too will be looking for NVIDIA if it gets over, say, a 200. And specifically, I'm going to look for NVIDIA long over, say, 202. Okay, so if it does climb up with an exit target near 240. Other really good charts to follow are institutional favorite Apple. Still looks pretty terrible here, but if it breaks the 150, say 152, I'll be looking for a little bit. What I don't like is the range isn't good. What I do like are strong directional charts like Eli Lilly, right? LLY, one of my long-term favorite healthcare related instruments, LLY, large green candles Thursday and Friday, and it's pouncing to a new high over 325. I'll be looking for LLY long if it gets over 327. We have to protective stop at, say, 320 on that chart. Warren Buffett favorite and crowd pleaser for us too, Occidental Petroleum. We look for both day and swing trading alerts in this frequently. It's been a favorite of our members and myself, currently up near 70 a share. So OXY, Occidental Petroleum, a Warren Buffett favorite, looks good up here. Another really good one is SWN. Now look at the volatility, look at the spike on that. We'll look at day trading charts in just a second. I'm almost done with swing trading charts. SWN had a really good run from 5 to 9, so almost doubled over the last couple of months. We'll see if SWN, Sierra Whiskey November, SWN breaks the 940 and continues on up to 10 and beyond. And another chart I bring to your attention, though it's a little pricey, is this guy, the SWX chart. Again, it went from 70 to just over 94, 95, so a nice consistent run up. This kind of chart is good for, say, long-term swing trading. If you're looking to scale into a position over the month, say a month or 2 months of time, I tend to be much faster. My swing trades last anywhere from 2 to 10 days. I tend to be relatively quick, but if you're a longer-term trader, this type of chart fits the bill. Let's take a look at some of our intraday charts. It's some really good runners yesterday. Carnival was good on Thursday. It was okay yesterday. It was better on Thursday. But Carnival Cruise Lines looks like a really good breakout. Now, these are the kind of charts that I cover in my live trading room. And just a reminder, if you're not yet a live room member, I do have a special going on till Tuesday. So a Memorial Day weekend special. You can get 6 months access to my live room. No software to buy, no courses to buy, no extras. It's only $497 for 6 whole months. That's over, I think it's a total of, well, it's at least a couple hundred hours of training. We meet Monday through Friday, 8:30 till 11, and in the afternoon from 3:30 till 4. And also on all FOMC or other economic release dates to take advantage of the market volatility during those times. So if you're not yet a live room member, so many of you joined lately, and thanks to all of you who are members, you can try me out here. It's just $497 for 6 months. No extras, no upsells, nothing else to buy. And it's available at trademastery.com, Memorial. And the deadline is just 3 days. So do be sure to join if you're not yet a member. And if you're currently a monthly member, you might want to upgrade to the 6 month plan at this rate. It's only, I think, $86 a month or something. So really inexpensive and really good quality training. Now, one thing that separates my room from everyone else out there is I give specific alerts as well. So for example, let's say plug yesterday. I called this for members at 17.4. You can see the alert value in the rightmost column of that quote box up there, where you can see it says plug in 1906, which is where it ended the day. In the far right, where it says 17.4, those are the alerts that I post for my members ahead of time. So that way they know exactly where to paper trade to get into the positions. And I give you specific entry and exit and re-entry price points as well. So that's one thing that separates my room from anyone else's. We don't just talk about charts. I trade daily, of course, and I like to give you specific entry triggers where I'm looking for entries. So, and you can see that would have worked out great if you'd taken it, right? Think of how much money you might have made if you'd taken that. We can take a look at some of these others too. So the purpose of me doing this is to familiarize you with the kind of charts that we cover in my live room. Like one of my smart traders, Wendy, had mentioned this one, SIGA, I called along at 10.7, right? And that 10.7 first breakout, it ran all the way up to 14. I don't expect that you'd get the entire, $2 or $3 out of it, but if you got just $1 out of it, that'd be a good win, right? And at 10.7 out at 11 or 11.50 or 12 or whatnot. Anyway, 10.7 and above was a good trigger for our members in SIGA. That's one of our featured charts from yesterday. The GPS fill, that's one I found on a scan that I did, and it gapped down. This is a gap fill pattern, and I got our members long at 9.7. That's just the sweet spot on the bounce. So if you have a big multi-point drop, it's often good to not only look for a short at new lows, but mostly I like to look for a pivot if there's at least a point or two of range. And that was a long call yesterday, was 9.7 that I alerted people to before 9:30, and it ran all up to, but just around 11 or so before pullback. So good run for us in GPS. Robinhood also was a valiant breakout yesterday. I called along at the, let's see, no, I didn't put a along for that one, but you can see it went up all the way from 9.5 to just under 10.40. So Hood, one to keep on the radar for next week. One of my traders mentioned this one, PDD into the close. I think that was Damon, right? Anyway, really good chart. Ran from 43 to 48. We'll see if it breaks the 50 or not come Tuesday morning. I've been trading Snapchat myself ever since the big gap down day, and it did really good. You can see it ran all the way from 13 up to 15. It had fallen from much higher and may be good for even more. So Snap, crackle, pop. We'll see if he goes up. We already looked at CCL. And NEO's another good chart. So but think in the back of your mind the profit potential as well as the risk, right? Day trading is extremely risky and not suited for most people. Most people who try day trading lose their shirts or lose a lot of money because they don't have the training. And that's where I come in. I hope to give you training that can potentially be of help to you in identifying, most importantly, what's worth trading in the first place, right? The charts that are really horrible to trade are the under $10 low float charts that are ran by these guys who front run their members and they try and scalp thousands of shares and take advantage of people. We don't do that. I like highly liquid, at least 15, 20,000 shares a minute or 100,000 shares type a minute, very liquid instruments so that there is no front running, and very wide ranges so that it's potentially easier to pick up a win on the chart. So I like this kind of chart, wide multi-point range, 10 to 14. And just think, you could have thrown a dart at this chart anywhere on the way up and let it go till the end of the day and you would have done just great. So that's good. It's a good point. Let's see, a lot of red candles and green on the way up, heading I can stop down. One thing that I like to do is set up a sequence of triggers. And that's one thing that I teach my traders how to do, is set up a sequence. So if you get in one position and use like a 10 or 20 cent initial or trailing stop and either get shaken out or small win or small stop, you take another try at it up at a new high. And the goal is to build a position sequentially over time. For example, when I trade, I often start off with 200, 300, or 400 shares at a time. And by the time all's said and done, like the last one's going to be a stop on the sequence, but I may be in 16 or 19 or 1700 shares, but having built the position 2, 3, 400 shares at a time, every 15, 20 cents on the way up. And that's something I exclusively teach how to do with live real money trade examples I'm doing. So, and I tell people ahead of time exactly what we're looking at. Now, ETFs is another thing that I specialize in, and SOXL is my favorite way to trade the market long. And I traded this very successfully on Thursday. I don't think I traded much yesterday, but I know I did really good with it on Thursday. SOXL, really good way to take advantage of the market upside. And TQQQ is my other go-to favorite because of the range and the trend. And the consistency and the high volume, very easy, very liquid, very clean chart, right? These are, this is about as easy as it gets to day trade, right? It's got big enough range, big enough volume. It doesn't chop around. Horrible charts are charts under $10 that are the low float, thinly traded things that misleading FTC got in trouble people advocate. We do not like things under $10 that have low float or low volume. I specialize in charts like this because they're relatively consistent, high volume, nice, clean, tight chart pattern. And unlike the cheap charts, they're often on the wrong side of things, that pops and drops. You get in and they get circuit breaker halted and drops, and just say no. I've lost the most money in my life for charts under $10. So that's a lesson learned. Do not trade stuff under $10 unless it's an especially good chart. And we do cover occasional ones. I didn't cover any yesterday. As you can see, the prices are all like $10 to $20 for most of them, in the teens. Now the ETFs, we like ones that have good volatility as well. So for example, I'm looking for a pivot in things like SQQQ. I traded cold successfully on its breakout, and I sold not at the exact top, somewhere up in this region, I think 23.10 or something. Anyway, and I bought pre-market. Natural gas inverse KOLD did a reverse split, and it was much cheaper, like $6 a share. Now it's 20. Anyway, KOLD, and also the short crude oil, SCO, worth keeping on the radar as well. We're almost done here. One thing we always follow very closely is the S&P Spiders ETF, SPY. And in the lower right corner of my display, do you see those 4 green boxes? Those are the 4 green candles in the most recent 4 minutes of the SPY. And it does a really good job of identifying for us relative strength or weakness. If there's 4 red candles, I look to go short. If there's 4 green candles, I look to go long. Oh, thanks. So those are the kind of charts we like to focus on. LabVIEW also had a really good day. One of my traders had mentioned that one. And for a cheapie, hey, LabVIEW may be worth a shot because it's up at a 2-day high, 6.5 a share from 540, and that's a good strong long pattern, maybe to go long in on a continued move up over 6.6 or 6.7 next week. So the whole thing is doing well in this kind of highly volatile market requires you to be quick on your feet to think about which charts are actually worth trading. And that's where me and my team come in. We're able to identify the charts, like I did for my members yesterday, that I actually have good trade potential, high volume, nice, clean, consistent breakout patterns, and entry and exits narrated for you in live real-time markets. So join my room. It's at trademastery.com/memorial for the current sale. It's the best price I ever offer, $497 for 6 months. So hope to see you there. Thanks. Thanks, Will. Thanks, Steve. Hey, Phil, LTHM. Let's take a look. LTHM. Yeah, that's a great chart. Thanks. I love that chart. That's a great chart. I'll put that on our watch list for Tuesday. Thanks. Yeah, I trade that myself, and I had a really good run, right? 31 to 34. Yeah, it's a perfect chart. That's the right kind of chart to day trade. Not the cheap under $10 junky stocks that only run 20 or 30 cents and, oh, I made 30 cents on the stock with thousands of shares. No, that's not how to day trade intelligently. It's better to trade just a few hundred shares and grab a point or two here and there. That's at least my thinking. Hey, Deborah, let's see. Question from D. What's SOXL? It's the semiconductor long leveraged ETF. just like SOXS is the opposite. SOXS is the semiconductor short instrument. I played the bounce here, but overall I got stopped out trying to play bounces on that yesterday. I didn't do good trying to play bounces on that. I did do good with the SOXL though on Thursday. So you can kind of what I call pair trade them. As one is going up, you buy it and you go long, and as soon as it starts to go down, you sell it and then flip to the opposite chart that does the opposite thing, right? So if this one does a sell-off, the SOXS will do a big bounce. And so you go back and forth. And I teach traders exactly what to look for, how to manage entries and exits, and the exact trigger points to use as well. So, hey, Javendra, ABCL, let's take a look. ABCL. No, the volume's too thin on that. I like the breakout, but two things are fail on this. One is the range is too small, and the other is the volume is not good enough. Remember, volume, I asked that you only ask for things that have at least 15 or 15,000 shares or more per minute volume. You can see the average volume, and this is under 10. Okay, so it fails the volume test, and also fails the volatility test because the range is only 40 cents. So that's that'd be a terrible chart. I compare that like an eye test. Compare that with this. Notice please the volume here is well over 20,000, and the range, the most important thing to look at in your trades is volatility and volume, the range and the relative volume of the instrument. So this one has a $3.50 range, whereas that other one only had a 50-cent range. So I don't know about you, but I find it much easier to trade things that have 3 points. And if I can get 70, 80 cents or a dollar out of a $3 range instrument, I'm a happy camper. I'm not trying to get the whole range, just a chunk of it, right? So that's one thing to visually look for, is make sure that you trade charts with high volume, nice, clean, consistent breakouts, and a big range. That makes your job at least it makes my job as a trader much easier. Hey, Heidi, looking at MA crossovers, is it 20, 50, 50, 200? No, it's not. MA crossovers are a lagging indicator. They're peripherally okay for swing traders, but no, the tighter the lower the number and the periodicity, the less signal strength it has. A 50-200 crossover is a lot stronger than a 20-50 because of the magnitude of the range. But good question. So anyways, folks, I'm going to wrap up now. Been good working with you guys. I'm going to wrap a few minutes early. I want to thank y'all for being here. It's been a good session, and I hope that I can help you make successful trades. As I have so many thousands of people, I've been running my room since the year 2001, I think, or 2000. It's been 20 years I run the room, and so many people have found value in it. So do go to trademastery.com/memorial, and you can get 6 whole months with me for only $4.97. And that's a bargain, right? For the price that people would charge for 1 or 2 old, stale, pre-recorded courses, you get 6 months of live market action with me, hundreds of hours of live market training for only $4.97, which is much lower than I should be charging, to be honest. But I make it up on volume, hopefully. So if you do want to take a shot at it, just join trademastery.com/memorial. No courses to buy, no software to buy, no extras, no standalone scanners and that kind of stuff. That's the total price. It's just $4.97. So anyway, hey, you too, Jim. Have another great Saturday. Thanks, sir. Have a happy Memorial Day weekend. You too. It's a question about buying some UVXY at the end of the day. So did I. I bought it's 200 or 300 shares. I think I'm going to use like 1370 on it. One thing, whenever you're trading inverse instruments, if they gap down, I don't sell the gap down unless it goes down another, say 30. So 30 cents under the low of the gap of the day. That's so if it gaps down to like 13.8, it goes down to 13.5, I'd sell 13.5. If it opens flat at 14, it goes down to 13.7, I'd sell. Now, if it goes up, say 30 cents above, let's say it holds steady, opens up at say 14.50, it runs up to 14.80 or so, I would buy. So I use roughly 30 cents outside of the gap window for the ETFs to decide whether to go long or to sell. Good point, so we're right. Thanks. Happy Memorial Weekend to you and yours. And remember what it's for. Do remember our men and women who've sacrificed I'm a huge fan of our military and law enforcement. So I live in Colorado Springs, so I'm a big fan of military. I fit right in here. I'm very conservative, so I have deep respect for our military. So do remember those who have given everything in service of defending our way of life, and say thanks to any local law enforcement or military, active military you folks might say, or retired or veterans. So thank you so much for being here. Take care, and I'll see you guys next week. Hey, you too, Friday. Yeah, you guys have a great long weekend. We got a couple of days off, so take a minute to remember why Memorial Day is there, if you would. And hopefully I'll see you in the live room come Tuesday morning. So take care and best wishes. Bye for now. Trade smart. Bottom line is there's so many trade opportunities. I'll leave you with this one thought. The biggest improvement to my own trading from a P&L standpoint came when I learned to do what Sosnoff says, which is trade small, trade often. Segment your trades, leg into, leg out of your trades, use really tight stops, throw a lot more darts at the market with much smaller share size, like 20, 50, 100 shares is fine. You don't have to be trading hundreds or thousands of shares. Take a lot of, throw a lot of small darts with really tight stops, because it's a numbers game, like the law of large numbers. You want to give yourself as many chances to get it right, and you start off small by planting a lot of seeds with tight stops. Half or more of them will probably stop out. That's why you use small size and tight stops. The ones that do start to work out, those are the ones you then start to scale into using position sizing, as my colleague, the late, great Van Tharp would say. So take care, and I'll see you guys next week. Bye for now. Stay safe out there, too. There's a lot of bad drivers, so be careful, trade safe, and I'll see you next time. Take care.